Hi everyone, today let's go over the economic calendar, then we'll take a look at Max Payne, then we'll quickly go over some of the charts, then we'll look at my results for the day and my positions going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Don't forget that the market is closed for Good Friday, so the next session is Monday, and then I go over the longer term charts on Sunday, which is a really important episode. Welcome to the Portfolio Bulletin. Let's get started. Looking at the economic calendar here for Thursday, you can see Challenger job cuts, 89,000 higher than the 65,000 expected. Challenger job cuts percentage, 319%, also much higher than expected. So job losses are starting to hit the markets. Talked about this many times. Initial jobless claims is also higher than expectations here, 228,000 versus 200,000 expected. The average 4-week was also 237,000 higher than the 169,000. Previous iteration was also revised up from 198,000 to 242,000. So job losses continue to trend up. You definitely have to pay attention to this. And then looking at tomorrow, we do have Good Friday. You can see it's listed here as a holiday, but we still have non-farm payrolls here at 8:30. And then we have the unemployment rate at 8:30 as well. At this point, I expect both of these to be worse than expectations. And it's hard to say which way that's going to push the markets at this point. It seems like the market sometimes goes down when these factors go worse than expectations. But realistically, this should be causing the Fed to be a little bit more dovish and potentially look to pause in the next meeting, which could be bullish for overall markets. Either way, we'll take a look at these reports and we'll see what the market does on Monday. Moving over to Max Payne for today, just to see how we did, you can see Max Payne actually ticked up to 407, which was interesting. And then we closed a little bit above that at 409. Still didn't get above 410 at the highest call wall. But that put-call ratio continues to make us go higher. You can see how many puts were in the market at the close. And about 1.7 of those were puts, which continues to prop up the market in my opinion. You can see we closed right here at about 409. Nice low here for puts, as well as calls. Perfect spot to finish and close the markets where lots of people lose money. And taking a look for next week, I just want to highlight that Max Payne is down at 404. Put call ratio super high at 2.5. Not a lot of options in the market yet, but you can see decent amount here at 412 and 420, and then a decent amount of puts here at 405. So right now, between 405 and 410 makes sense. Anything higher than 412 doesn't seem to make very much sense. Obviously, this will develop over the week and we'll pay attention to it, but right now that's what we're looking at. Moving over to the charts, starting with the S&Ps here on the hourly and the daily chart, you can see we had a little bit of a double bottom from yesterday to today, and then we rallied, taking out that midpoint. Looks like we're going to get a little bit more upside on Monday, as long as the market doesn't react negatively to the jobs report and unemployment. Maybe we come up, make a double top here, that would be interesting. Or maybe we make a lower high, that would also be interesting. But if we do take out the high, then you have to be looking to some higher prices. So looking to see whether we get that topping style formation or if we make new highs and then we have to adjust the plan. Right now, still looking bearish over the medium term. Daily chart stepping into bearish territory. Hourly chart also looking to turn bearish here. But RSI on both charts is starting to look a little bit more bullish going into Monday. Moving over to the NASDAQ here on the 15-minute and the 1 hour, you can see we dipped below that 314 level and then found support and stayed above, similar to the SPY. Low with a lower low here instead of a double bottom, but then we got that fast rejection, came up and tested the 200 SMA on the 15-minute chart and then closed slightly below it, but we're above VWAP and the 55 EMA, so you have to respect that. Looking at the hourly chart, stopped right at the 55 EMA. Momentum started to turn a little bit bearish here in the after hours, so maybe this is a short-term retrace and we get the continuation down, and this materializes into a lower high here at this area of highest volume, 318.15, 318.16. But we also have trend support sitting down here at 316.65, around that 317 level. Come in here, find support, go higher up to 321.82. Certainly a possible scenario. But if we do break through this level, then we're probably going to come back down and test 314 once again. This up move here today was more aggressive than I expected it to be, and we pretty much rallied throughout the day after that short move down early in the session. Moving over to the Russell and the Dow here on the 4-hour chart, you can see the Russell basically went sideways, tested that previous day's lows, and then rallied, closing just above the area of highest volume. So not too bad here. Does look like a potential higher low setup versus this lower low that we had going back to the end of March. And then similarly here on the Dow, big wick to the downside, ended up flat on the day. Momentum still bearish here on the Dow, but we're going sideways, and remember, price action is always king. RSI showing slight bearishness. Russell, similar thesis, slight bearishness, but we're still going sideways here, and there's a potential to go either way from where we are right now. Moving over to Apple and Tesla here on the 4-hour, you can see similar thesis to the SPY. We had that dip, a little bit of a rally here today, double bottomed at support. We're now at resistance, looking to see if we either take out this trend line or the high and make new highs, or if we get that topping pattern and this starts to roll over a little bit stronger here on Apple. Again, if I had to guess, I would say that this is bearish after the big run that we've had here on Apple, but it can definitely go either way, and you have to respect price over everything. Looking at Tesla here, we came down, tested that support line, found a huge rejection, and basically finished flat on the day. Look at those candles, just dojis across the bars here. Pre-market, first and second candle here on the 4-hour, and then after hours, all flat right at this 184.98 level, 185. So keep an eye on that. Absolutely could go either way. Found support, stuck between these two levels here right now on Tesla. Moving over to Alphabet and Meta, I just want to highlight that Alphabet broke out here today from its previous high, made a new high here today, looks very bullish, got an overbought conditions here on the hourly chart, but it's going higher and you have to respect that. Meta also retesting wicks from those previous highs. Couldn't quite get above it in terms of a closing price, going back to this wick from for April, but still looks stronger than some of the other charts that we've looked at. Moving over to staples and discretionary here, you can see staples still hovering at resistance. Definitely watching this, waiting to see what happens. If we get above it, we're probably going higher. If we stay below it, probably going lower. Have a nice pivot point here, waiting to see what happens. Discretionary, on the other hand, moved much, much lower. We expected it to come into this zone and then found support and rallied and finished basically unchanged on the day. So that's definitely an interesting development. Certainly could see this come back up and retest 147 over the next few days, back into this zone of resistance. Certainly possible after the rejection that we've seen. Similar to the move down here, where we came down, looked like we were going much lower, through some wicks and then reversed. If we get a similar situation here, this could be going higher, but right now we're still in a little bit of a holding pattern right in this area that we've been over the last few months. Moving over to stocks above their 20-day and 50-day averages here, you can see despite the up day that we had, stocks above their 20-day average did not move higher here. Similarly, on the 50-day average, basically flat. So breadth not moving higher with the overall markets, generally indicating that this might be a little bit of a fake out. Moving over to high yields here, you can see similar thesis to everything else. Rallied pretty aggressively, took out most of the previous day, indicating some support in this zone. Touched these previous highs going back to 6 March as well, and closed pretty much right at that level. Definitely looks like we could go a little bit higher here, but certainly some overhead resistance. Momentum still stepping into the bearish direction. RSI still a little bit bullish. Similarly here, hourly momentum bullish, but it does seem to be rolling over here at the end of day, and pretty solid volume on that last candle compared to the mid-session. Moving over to TLT on the 4-hour and the daily chart, continues to trend higher here. Took out these previous highs. Still looking to take out the high going back to 13 March, which is at 109.10. Didn't quite get there today, got a little bit of a wick, and we'll see if we can get above that level early next week. And then moving over here to the VIX on the hour and the 12-hour, still chopping within this range, but we did have a new low close below these previous lows and below the support line. Still looking at that 1815 level back at these previous lows. And then we have some much lower lows that we can watch if we do get below that 1815 level. So that's what I'm watching next. Certainly could just overthrow this and bounce, but right now you have to respect the fact that we did close below this level and that we might be going a little bit lower here on the VIX. Moving over to my accounts here, you can see I was down a little bit more than $100. I got chopped around on the NASDAQ. I didn't expect the rally that we got to be quite this strong. I thought we might get a midday rally, and I did think it would stall out around that 317 level, but we ended up closing at 318, which put me in a tougher spot on some of the calls that I had. So I ended up losing a little bit of money there. Did set myself up with some profits on a couple of puts that I did roll out to Monday, some 313, 314 puts. that I sold, so we'll see how that plays out. Otherwise, IWM, I did take a 173 position. I sold the 172 originally, and then as it rallied, I rolled it up to 173, and that was a max profit here. And then for Monday, I took a 171 position. And then the XLE position, I decided to let this go. We'll talk about that chart on the Sunday video, but it does look like it's going to roll over at least a little bit in the short term. So overall, still a positive week, but down a little bit here on the last day of the trading week. In terms of Monday, we talked about it a little bit already. Still looking at some more bullish price action, at least in the short term. I don't necessarily think we're going to make new highs or anything, but you have to respect the little bit of rally that we have going into Monday and maybe even Tuesday based on the jobs data that we see come out tomorrow. Comment down below what you thought of the charts, and make sure you check out the Sunday video. We're going to go into much more detail in that video, and we'll obviously go over the weekly close. So definitely check that one out. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading, and have a great day.